This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's scheduled events for Friday, January 15th. In Europe, the EU finance ministers resumed their meeting again today. Yesterday, they discussed the bailout programs for Greece and Cyprus, as well as various proposals for the Eurozone. From reading the transcript of the press conference, it seems like they had a good discussion and will continue talking today and at their next meeting in February. In other words, no decisions. Looks like nothing market affecting is likely to come out today either. The only point of controversy I could find is that Italy seems to be blocking the EU's offer of aid to Turkey in return for stemming the flow of refugees into the EU. There could be some fireworks on that point, but it doesn't seem to affect the markets that much. As for the indicators, there are only U.S. economic indicators out today. This includes retail sales, industrial production, and the Producer Price Index, all for December, and the Empire State Manufacturing Index and the U of Michigan Consumer Sentiment Index for January. My impression is the data are likely to be poor and I think could lead to some weakness in the dollar. Starting with retail sales, falling auto sales and gasoline prices suggest that the headline retail sales figure might be bad. As for the core figure, which excludes autos and gasoline, retailers have complained that the unseasonably warm weather and a fall in foreign tourists caused Christmas sales to miss their targets. The market's looking for a 0.4% rise month-on-month nonetheless, although that is down from a plus 0.5% month-on-month rise in November. I think the risk is that it's lower than that and that there could be some disappointment in a weaker dollar. As for industrial production, U.S. manufacturing has struggled due to sluggish global growth and a rising dollar. Furthermore, the unseasonably warm weather in the Northeast will have reduced demand for energy. So a disappointing figure seems likely here too. The market looks for output to be down 0.2% month-on-month. That's actually an improvement from down 0.6% month-on-month in November, but it's still a decline. The IP data is for December. Then we get the Empire State Manufacturing Index for January, which will give us a more up-to-date indication on manufacturing. However, only a slight respite likely. The index is expected to improve slightly, but to -4 from -4.59. That's not enough of an improvement to change anyone's view on the U.S. Finally, we get the U of Michigan Consumer Sentiment Index for January. Despite the problems facing the U.S., not to mention the Fed rate hike in December, sentiment remains buoyant, and the index is expected to rise back to the 2015 average of 92.9. This is similar to what's happening in Europe, where sentiment is improving even though the hard data isn't. The dollar could recover some of its losses if sentiment does indeed turn up. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.